Hi everyone, welcome back to my channel. Today I want to do a quick video on a very specific setup that works on NQ futures overnight and has been very profitable for quite some time. I'll go over specific rules involved and various ways you can maximize profits on it. I wanted to release this video before market open tonight in hopes that someone watching this video will be able to capitalize with me if we get a POC touch from Friday, December 9th, 2022. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeView, Voland, and Elite Trader Fund. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. It really does help this channel grow and it means a lot. So that being said, let's get right into it. So the first thing I want to talk about with this setup is the rules. So rule number one, very important here. I've only seen this work on NQ overnight. It works very consistently on NQ overnight, but I've only seen it work on NQ. Now, that being said, this setup might actually work on other futures products. I haven't really found any others that it worked consistently on, but that doesn't mean it wouldn't, because I don't necessarily trade all futures products. Like it could work on Forex futures, it might work on oil, could work on corn. I'm not sure, but you'll have to go and test it to find out for yourself. I do know it works on NQ though, and it does not work on ES. It only works between the hours of 6 p.m. and 7:30 a.m. Eastern on the futures market, and it only applies to the POC of the night before. So other untested POCs from days prior might work as long as they haven't been tested or reached during normal US market hours, meaning if a POC from a day prior was at all touched from price action that came after, that POC is not valid. And I'll get into exactly what I mean, but I just want to touch on how to play this. So what we're going to want to do is we're going to want to, when we get the close of a day session at 5 p.m. in the futures market, we want to set alerts prior to reaching the POC that was created on that day. When the prior day POC is touched in the next overnight session, this is when we're going to want to take the play, and we're going to want to use it as classic support and resistance depending on the direction we approach it from. So if we approach the prior day POC from the bottom up, meaning price action is moving up, we're going to treat it as very strong resistance. Whereas if it's the prior day POC is below the current price action and we move down towards it, we're going to treat it as very strong support. When we see that happening, and also one thing about the POC I'll show, there's a range where we might have some high volume nodes, which I'll get into, and we might want to treat that entire range, not just the POC itself, but the high volume nodes that surround the POC as an entry point. Ideally, we can set an 8-point stop above or below that high volume node range. Now, that being said, if you can read price action and volume, it does help with getting more precise entries. And we want to try to take multiple positions. So I recommend taking at least 5. Now, if you don't want like doing minis, you can do micros. We still want to make sure we use the NQ mini POC because sometimes it differs on micros. But you want to try to take multiple positions because we will use those for scaling out as we move higher, which I'll get into shortly. And so before we get into the potency of this, let me just talk about what I'm actually saying here. So if we pull up the NQ chart, now this is the NQ Mini's current contract, and we can see I already have an alert set for tonight, and this alert is set from Friday's session, so December 9th, 2022, right before the POC. When we get into these high volume nodes, I want it to alert me. So the idea is as price pulls back into this area where this POC is at, I want to get alerted so I can start paying attention. Because the idea is as we pull back into this POC, I'm going to be looking to enter shorts, and I'm going to set an 8-point stop loss, and I'm going to try to take a minimum of 10 points profit. Now, we can do better than that, and I'll talk about that in a second. But let me just show you how this has worked in the past. So if we go to the day prior, so we can see this is Thursday, December 8th, 2022. Market closes. We have the POC right here. Let me just zoom in a little bit to make this easier. So POC is right here. We can see market opens higher. We come down right into the POC. We hold, and this was incredible. On Thursday, it was just such a massive move. We hold the POC like we normally do. It's acting as support because it was under us. We proceed to move higher somewhere around 100 points by the time it was all said and done and we opened the next day. Now, if you call it any of that, you made significant profits, right? So even if you just had one contract on there. It just was would have been an amazing night, especially if you're not typically trading minis. If you know 10 micros would have been the same. You could have scaled out along the way. So that was a perfect example of this. We have another one the day before from Wednesday, December 7th. Now this time it's a little trickier because we open right at the POC. Now the caveat here is, again, we have this high volume node range, and we can see the ledges really stick out right around here where my cursor is, and you can see we failed to break above that. Now if we zoom in on a lower time frame, which I'll do in a second, it will make it a little more obvious. And then we drop, and we drop from 515 all the way down to, let's say if we got out at 45, so that would have been around 60 points right there that you could have called up that move. And then we end up getting back above it. We break, retest it, and move higher. Now that's a secondary way that you can play this if you're up all night. I usually only take the first hit when this happens, but of course if you're up all night and you prefer trading overnight futures because you have a day job or whatever it is, you don't mind being up. For instance, when my daughter was first born, I'd be up all hours of the night anyway, so it was great to trade this sort of setup. Now, you can see this doesn't work every single night. We get up here, and that's the thing about anything we talk about in trading. Nothing ever works 100% of the time, and the setup doesn't always present itself 100% of the time. But the key is setting up proper risk reward and acting on it when the setup does happen. Not being too scared to enter and having proper risk management. So we can see Tuesday, December 6th, POC all the way up here. We never make it up there. We end up breaking down. And then we don't come back to that POC until later in the normal US session hours, at which point this setup is invalidated, so it doesn't apply, and we can't reuse this POC because it does get used. However, it's interesting that the POC did set up almost in exactly the same place and then did come into the play the following night. So we come here. This is another setup where we don't quite make it. Even if we take this ledge right here in this high volume node range, we don't quite make it. Market opens and validates the setup. So once again, we don't have the setup present itself this night, and that's the thing. And it's usually about 3 nights a week we get this, but I'll talk about the potency of this because you can hit this hard when we do get it, and it can really be life-changing. So we can see here now, if we did say, okay, we're going to take this whole range surrounding the POC, then actually you would have had a setup here. And that's what I was talking about when we were talking about the high volume node range. We have gap, high volume node range, gap, high volume node range. So we have this high volume node range, which I've talked about many times on volume profile. And I should just take a second to show how this is set up. So I'm using the periodic volume profile. If you go to indicators, search periodic volume profile, you can add that in. The settings I'm using period of 1 day. So it's showing the whole day. Volume area, value area range is 70. It doesn't really matter in this case. The rows layout, I'm using 300 rows. And then we want to make sure that we have the POC turned on, and I'm using a thick yellow line here for this. And so that's the POC is showing us where the most volume was conducted from the day prior. And that's why this is so significant, because we have so much volume being conducted in these areas, and there's so much institutional money tied up in these areas, because this is not retail money that creates a value area this large. This is all institutional money. And especially overnight, where you have in the main session where all the money and the transactions are happening, you have all this volume built up, all this liquidity stored up. When it's tested in a low volume time in the overnight, we're likely to get a response from that. And you can see even in this zone, you know, if you do count this, which you certainly can, and you certainly can play this setup, this would have been another easy 50 points or so. So 40, 50 points or so. Now, and you can just keep going and look. So, I mean, right here, technically it's the same sort of deal. If you're going to take from ledge to ledge and draw this out, when we come down into that high volume node range the following day, we give it a quick tap and we go from 945 to 994 in a very short period of time. So roughly 39 points, 39 to 40 points. And then we can see here, this is another optimal setup. So let's just do the range, since that's what we've been doing. So we'll do this. Now in this case, even if you didn't do the range, you can see here, if we add in this array here, we actually do get a touch. Now this is a little bit iffy. Now, if we're playing the range, we do get a touch here at 5 a.m. We get a nice move lower before coming back up. This point, it's already 8 a.m. and there's market news coming up. This is a risky play. Now this ended up being, I can't remember if it was PCE or something of that nature, but this move was related to macro news, so it would have been very risky to play this and hold this. However, if you did, you would have made $11,000 even off of just like one, or just an insane amount of money. I'm not sure if it's 11,000, but you would have made an insane amount of money here, going from 12,065 all the way down to the lowest of 785. So hundreds of points there. And but I'm not saying, but I'll honestly, if we're following what I'm talking about here for the rules, then this would have been the setup, which would have been 61 down to 25, which is still a fantastic amount of points. And you know, it just keeps going on, and I recommend looking at the chart. Now you can see here, let's see, we never get down to this POC for days and days later, and so this setup never happens. Now this is where it can get a little weird. When we open on the POC, and we once saw one sample of it, and so when we're opening right on the POC, meaning we haven't started above or below it, it makes it a little trickier. And you could see, you could certainly have gotten faked out here. Now, if you were good at reading candle reactions on lower time frames, I trade the 1 minute overnight futures, then you can indeed play this stuff. And so even if you were to play the initial rejection here, and let's say you call it about 19 points there, and it started moving up, you get stopped out, and ideally you're sliding your stop with that, which we'll talk about shortly. And then when you come back above it, break above it, and retest and move higher, you could have gotten points in either direction. Just depends on how you play it. Here's another example. We don't even need to draw the range this time. We get a beautiful touch at 3:30 in the morning. And this case, I don't know if 8 points was enough. So yeah, you probably would have been stopped out here. But even if you get stopped out and you see the rejection start to occur again, you can always attempt to re-enter. And then, of course, we have this massive fall, which, again, holding into the market open can be risky, but if you were to, this would have been an insane win off of that. Right here, you can see this is one of those situations where we want to mark the high volume node range, which is probably smart to do in general. And actually, I'm going to adjust my alarm to account for that. I think I already did, but I'll double check it. But we can see we get a touch here. Now this is too late. Actually, this is at open. We get a touch and then we reject. So I mean, it can work in normal market hours. It just isn't as consistent as if you get a touch in the overnight. So going back to tonight's setup, let's mark this. So we have this high volume node range right here, right? So I'm gonna set I want to be notified before we get there. So I'm going to set my notification down here. And this is going to say we're approaching the POC from 12.9. So let's say market opens up, we gap up, we start to fill this fair value gap, because we have a fair value, this big red bar from 575 all the way up to 641 is a fair value gap on the 30-minute. So let's say we start to fill that. I'll certainly be looking to take long positions in hopes of that happening if we get price action indicating that. We get up to this POC range right around 652, so 11,652.50. I'm going to be looking for shorts, and let's talk about how we can hold through those. So I'm just going to go to the day prior, and to do this, we can add on the VWAP. And so let's say if we add on the normal VWAP in TradingView, so you just search VWAP, volume weighted average price, and we add in the 1 and 2 bands multiplier for the session. Open, low, close, divided by 3 is the standard for VWAPs. This is what it looks like on your chart. So let's drop down to the lower time frames, the 1 minute. And let's go to the prior day POC and talk about this. So I'm going to mark this right here with a yellow line, a yellow ray going across this yellow dotted line. And so let's talk about this here. And so we'll hide the current volume profile. So we can see overnight session opens, we drop. We get to that prior day POC that we just marked. Make this a little bigger here. Okay. We get to that prior day POC. We see a lot of consolidation around looks like we're going to break away, more consolidation, we start to break away. So let's say you enter right on the POC line with an 8-point stop. So right, our stop would have been down here at 618, gives us plenty of room. Now, the first place you're looking to take profits would be the first VWAP band. Now that would be quick, so maybe just drop off one contract. We definitely don't want to unload the bulk of our position in this situation for just a matter of 4 points. So then once we get to the VWAP, now we just blow through the VWAP here, right? So if you're looking to unload your position, you see a candle of that strength get through the VWAP, then it's you might want to consider not unloading your full position. But let's just say we do, not full position, but the bulk of your position. So let's say we opened up 10 contracts here. We let go of 1 here, so we have 9. We let go of another 5 here, right? So that's about 11 points that we caught there. Then our next profit target, which we do get a little doji on, we unload another position, and then at the top of the VWAP bands, we unload another, and then we can just sort of hold runners until we get a change of character, meaning that we make a lower low, which doesn't actually end up happening until we get to about about the London Open, where we start making lower highs, and then eventually we make a lower low. So right around here where we finally start rejecting and we make a lower high, you could consider closing up the rest of your position. And that would take you to from about 626 all the way to about 11,700. So let's say roughly 74 points there, which is just incredibly significant. So if you're doing minis there, which micros are fine too, right? Just do whatever fits your account size. Do what fits if you're doing a funded account like me, we have to factor in trailing drawdown limits and things like that, which means that we want to make sure we're not carrying too much position, like carrying out too much drawdown even while we're up. So let's just say though that you're making use of that. Let's talk about the potency. So 3 nights a week you catch 10 points off NQ, which we just saw. You could catch an upwards of 75 to 100 points. And then so even with just 10 points, that's $200 per NQ contract. Let's say you were doing five contracts, that's $1,000 per hit. Let's say you get that 3 times a week, so 52 weeks in a year, that's $156,000 for this one setup. So then if you increase your size, right, if you do 10 contracts or 15 contracts or whatever, ultimately that's going to keep increasing this number. Now, nothing has a 100% win rate, but it has far more than a 50% win rate, which you can go and back test yourself. I highly recommend doing, which means risking 8 points to make 10 is always going to be very effective. And then if you pair this with things like the monthly OPEX, Trade Addicts dealer market diary, like for instance, what we have coming up here on 12/16, where we should see, assuming this stays the same, assuming that CPI doesn't change this picture dramatically, we have like negative 7 billion deltas that need to be de-hedged, which end of day on 12/16, if this picture remains the same, is going to lead to significant buying, which means in that last hour, we could take NQ longs, hold those for the last hour, probably get about 100-point run up on that. You could just trade these 2 things and literally do nothing else and make a fortune, or it would be, depending on your sizing, it would just be a very nice secondary income that you could have, and doesn't take a lot of dedication or time. But as always, don't take my word for it. Make sure you back test it. So anyway, I hope you found this useful, and I appreciate you watching.